well. Joining us, Mr. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeff, great to have you here, sir, in the afternoon.
Thanks for having me on.
Hey, one thing we haven't talked about today was some of the commentary from Waller at the Fed and just kind of the general kind of state of the macro outlook here. It kind of feels like we're in a moment where once you lock in 100% September, like what else is there to say, Jeff?
Well, that's the thing. And if we look out over the next through 2025, we're looking at maybe 5, 6, 7 rate cuts being priced in for the Fed. That feels fully priced in. And so, it's interesting to see how this is shaping up in the markets. Incredible rally in the yen. I know it's a safe haven. I know we're in a risk off mood, but a 3.5% rally over the last 5 days in the yen might say something about, the outlook for Fed rate cuts now being pretty, the market being pretty confident in that view.
Yeah, I'm glad we got you here today because there are a few things that seem to be showing up in the dollar that fit some of the international themes we've been talking about, because there's not a lot of reason to think the dollar should be getting blasted today. But if you look at the British inflation, you look at the yen, to your point, I mean, a few of these kind of stories are adding up a little bit.
Yeah, it's coming together. This morning we got the data for CPI, the final CPI number in for the ECB for Europe, and it was a good number. It came down to 2.5 in June from 2.6 in May, but services are still stuck at a high 4.1%, and so it looks like the ECB is not going to cut rates tomorrow. That's no surprise to anybody. It was only like a 3% chance priced in, but an 83% chance priced in for a cut in September. But we don't know what's going to happen between now and September. We've got the Olympics in Europe. That could raise prices, particularly on the services side. We just had the Euros, so we've got to see what that meant. Hell, we've got Taylor Swift coming up, too, in July and August. So all of this kicking in could keep services prices elevated over the summer, which means I'm not 83% confident in a rate cut by the ECB in September. I'm more than 50-50 on that one, but it is subject to some risk. I think the market's really thrown in with the idea that we're going to get rate cuts across the board everywhere in the September timeframe, and I'm not quite as confident as the market is.
It's a really important point, one that I think could easily get lost in a lot of the different kind of big picture shifts in the macro framework right now. That's a really important one, because if we are locking in with the most certainty we've had a specific time to cut, but they're sort of wavering a little bit in their path, that kind of makes the potential for their expectations and prognostications to kind of be more volatile, like ours were, a year ago. You know what I mean?
Yeah, that's exactly right. And I don't think we're going to hear a lot of clarity tomorrow from the press conference. I think there's going to be a lot of, well, we have to wait and see. They were very clear about the move in June and then very clear that they weren't going to move this time. But I don't think they're going to give us a lot of clarity about September. I think they're going to leave that up in the air. And you're right. So that raises maybe more uncertainty about the next move from the ECB versus that of the Fed, at least in the eyes of the market.
Also, too, kind of makes us think if, we are all kind of on this sort of like translated kind of wave, we're all kind of had the similar experience, COVID coming out. China's a big total exception. I think Japan probably too, but like most of the rest of the world, especially Europe and the US. So if they're going piecemeal downshift in their cycle, that might mean that we need to think about that too. Like it's not just going to be the beginning of this huge slope lower.
Yeah, and there are a lot of variables, right? So actually, one of the things I was noticing this morning is we are back at shipping costs, the highest they've been since the pandemic. We're nearly halfway back to where we were at the pandemic peak. They are showing no signs of turning around. Now, I know it's only 1% of costs, but it's up 300% from its low. And, that's really affects all manufactured goods. So that's continuing to have a background factor. I mentioned services prices are high. So there's just a lot of these risks to the volatility and inflation over the next several months that I think markets just really haven't wrapped their brain around yet.
All right. Great stuff, Jeff. Exactly what we needed. A nice central bank discussion to round us out fully in our afternoon. Appreciate that very much. Jeff's Chief Global Investment Strategist at Charles Schwab. Thank you, sir.